I'm gonna show you how to spot liquidity in the financial markets. Let's go. So, what is liquidity in trading? I'm gonna be honest. Liquidity is just a way for the market makers to f you over. Like, there it is. Just to be honest, right? So, what is liquidity? Liquidity refers to these price points in the market where you will have a lot of stop losses, whether it's bullish or bearish. No matter which side, there's liquidity on both sides. You'll have a lot of stop losses placed, and the market makers typically like to target these areas when it comes to entries and exits of big moves, right? So when the banks want to buy low, they might just push price lower below a support zone, activate all the stop losses of the buyers, and also trigger a few more sales. They want to trigger some sell orders on the break of that demand zone, just for price to push back up and go where they wanted it to go in the first place. So what do you get? Price comes here once, you get this aggressive buying coming out of it, right? So, and you see along the entire way up, price is pumping these higher lows and higher highs on the smaller time frame. It's pumping out all of these. Like, all of these are orders here. See, these are orders. You have orders here. You have orders here. You have orders here. You have orders here. So let's just go ahead and draw that up. That stands for liquidity. Right. What else? You got this liquidity here. Right. You have this liquidity up under here, right? And like I mentioned, all of this liquidity, you got orders being pumped. You got buyers here, you got buyers here, you got some buyers here. Now liquidity is constantly being pumped on both sides of the token. Bullish and bearish liquidity is always constantly being created. We got sellers entering at this price point up here. You got sellers entering here. So this is all liquidity here. Before it takes this liquidity here, it pumps all of this liquidity on the sell side. It pumps it. Then we come here, and our liquidity, our first bit of liquidity, it has been taken, right? This low here has just been snatched by this little wicking candle. It just barely wicked it, right? And what do you get? Aggression again. Time frame. Liquidity is still full, right? So I look at this as more liquidity being pumped, right? We see here we get this steep drop off, and what do we see has been collected here? Now, what happens right after that liquidity is taken? We get opportunity to enter back up. But liquidity is a way to kind of gauge where you're at in the markets. You don't want to be caught too much of buying here and here. Like, this is a good short-term position, don't get me wrong. You could have very well got you a position from here to here on the short term, like that's a very good position. But you don't want to go and try to hold to these higher time frame highs, going off of, no real liquidity pool. Understand a little bit about what liquidity is. I'll probably be doing another video going a little more in depth. But yeah, man, make sure to like, comment, subscribe to Trades Aura Farm. And that's it for today.